There's only so much more time until interest rates are officially going to be dropping. The Fed rate monitoring tool is already pricing in a massive rate cut, and this is on September 18th. And even past that, November of this year, there's a good chance, at least being priced in, that there's going to be even a lower interest rate from there, and so on and so forth as time goes on. Now, the markets are obviously reacting to this in real time, and we can see right here for certain, the Vanguard Real Estate Index Fund is up substantially from the most recent lows. It's up over $10 per share. So obviously there's already a big move being priced in, but there's still a handful of REITs that are still offering a potential buying opportunity. Now in this video, we're going to go over 5 specific REITs, 5 single REITs that I still think could be offering an opportunity for buyers. But again, this is not going to last long, especially if rates are going to get cut maybe even sooner than we think. So if you want to see these 5 REITs, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The first REIT, this is a telecommunication tower REIT that still is offering a buying opportunity and offering a much higher dividend yield than we've seen over the last 5 years. Is ticker symbol AMT or American Tower. Now, as you can see right here, American Tower is offering a 3.09% forward dividend yield, which, not to mention, this telecommunication REIT raises their dividend extremely fast. Now, in the last 5-year time frame, there's only been maybe 3 or 4 other times that this REIT has offered this high of a starting yield. And when it comes to AMT, there is some potential massive upside. I've traded in and out of this stock many times historically. Now, I wasn't joking when I said this REIT raises their dividend very quickly. You can see right here, the last year, 10% dividend increase, the last 5 years, 15%, the last 10 years, 19% per year. So whatever starting yield you're going to lock in today, at least going off of history, you can expect a much larger dividend in no time. The next REIT that's still offering a potential buying opportunity, but not for long, is EXR or Extra Space Storage. Now this, of course, is a self-storage REIT, and it's offering a 3.91% forward yield. Now, not only is EXR's dividend very safe compared to lots of other REITs across the markets, but looking at the historical dividend yield, it's still offering a much higher than average 5-year dividend yield starting. Not to mention, just like AMT, EXR has raised their dividends very significantly historically. Now, even though as of recent, the dividend growth has been much slower, over the last 10 years, 16% per year, which is massive. Now, this was disappointing because I actually personally own quite a bit of EXR, and they did not do a dividend increase in June, which they were sort of scheduled to do, at least going off of the previous cadence. But EXR is a single REIT that you could potentially lock in a starting almost 4% yield, have a safe dividend, and ride this one all the way to the top. Another REIT still offering a potential buying opportunity, one of my favorites, one of the REITs I wish I would have bought more of when it was much cheaper, just a few months back, ADC or Agree Realty. Now, Agree Realty, where it's trading right now, is still offering a 4.52% forward yield, which is not bad whatsoever. The average is 3.89, so it is much higher, still offering a potential buying opportunity. But just a little while back, it pains me to say that ADC was offering well above a 5% starting yield. Now, ADC has recovered very quickly compared to lots of other REITs across the board, and this is because of the strength of this REIT, if you ask me. So even though this one isn't as cheap as it's been over the last few months, it still is offering a long-term buying opportunity, potentially at least, and ADC is definitely one to look into. Another REIT still offering an opportunity to buy is none other than a REIT that I personally buy all the time still, Realty Income. It's offering a 5.48% forward yield, has a super safe dividend, and is still beat up in price enough to be offering a nice solid starting yield for investors. Now, Realty Income's growth is sort of meh, 3%, 5%, nothing too crazy, although their dividend growth has been very consistent. Not to mention, Realty Income has 55 years of dividends being paid and 49 years of increases. Realty Income is still on my watch list. I'm trying to build up my position more and more over time. The last REIT that's still offering just a tiny buying opportunity, this one is Triple N REIT or ticker symbol NNN. It's offering a 5.04% forward yield, so it's much smaller than that of Realty Income. This REIT has recovered quite a bit, and even though it's offering a higher yield in the last 5 years, this one is getting a little bit expensive just as of recently. Now, I've been talking about these REITs for a while, and I had a good feeling that some of the highest quality REITs across the markets would be the first ones to recover once interest rates get cut or it gets closer to interest rates being cut. Now, after going over those 5 REITs, if you're still a little bit confused about why REITs do good or do bad in in higher or lower interest rate climates, listen in. This right here from SP Global says undoubtedly rising interest rates pose challenges for REITs. All else being equal, higher interest rates tend to decrease the value of properties and increase REITs' borrowing costs. In addition, higher interest rates make the relatively high dividend yield generated by REITs less attractive when compared to lower risk fixed income securities, which reduces their appeal to income-seeking investors. So let me spell it out for you. When interest rates are super high, borrowing money becomes more expensive, which makes their properties basically decrease in value. On top of that, REITs themselves can't really borrow as much money anymore because, of course, interest rates make it much more expensive. And along with that, when you can right now earn, say, 5% per year, more or less, just buying bonds, which basically have low risk or honestly almost no risk, buying into a REIT, buying into Realty Income, Triple N, or whatever else, and earning that 5% yield is not necessarily going to be as attractive. It then says, well, it would require a more detailed study to attempt to determine why REITs have generally fared well in rising interest rate environments. It is clear that rising interest rates are associated with factors that positively affected REITs fundamentals. For example, rising interest rates are frequently associated with economic growth and rising inflation, both of which are likely to be positive for real estate investments. Healthy economic growth tends to translate into greater demand for real estate. So they're kind of trying to figure out exactly why some REITs haven't really been knocked down all that much, because considering how high interest rates have been for a while now, it is honestly kind of shocking. But now lastly, most importantly, I want to hear from you guys down below when it comes to the 5 REITs that we talked about in this video and all the real estate investment trusts across the market as of right now. Which ones are you buying? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.